month was expected at 0.3%. It came back lower than expected, and that sent the CPI year over year to 2.4%. The expectation was for 2.5. That was even that forecast was lowered from the previous 2.7 year over year figure that we had in our previous month. So the perception is that inflation is continuing to decline. We're in a disinflationary trend. When you're looking at the Fed Fund futures, the change in Fed Fund futures has actually, we're at 48.8%. So that rate cut was as high as 50, getting into the 51s earlier this week. And the probability for the rate cut in June is falling. That is interesting because, a disinflationary trend and lower inflation prints than, what would be anticipated. You would think that the probability for the rate cut would be increasing. That's not what we see right here, which is kind of interesting. Gap fill statistics as we are going into our morning are 63% over the last 180 days. We've gotten slightly better over the last 90 days, 72%. Over the last 30 days, 83% of our gap fills have been filling on Friday. There's an 83% probability for a half gap fill inside of the 20 handle. There's a 69% probability of filling the gap. We were in a very similar type of situation to this last week. We were falling back down into these support levels in a series of extension shorts. As we were falling back down into these longs, we had completed traditional targets, and then we were going straight down in extensions, and we failed extensions down here, which then created this massive series of longs, which gave us a pro gap up and go type situation. Well, last week, Thursday's unfilled gap is still unfilled during trading hours down here at this 68, 17, 75s. And we have an extension short from Wednesday's lows to lows. And the inverse of that is a VIX Monday's highs to highs extension. And what we were watching for here was our extension short in correlation with our 20 handle that would lead us into two unfilled gaps below us. Now, we didn't trade up into the extension. We actually didn't even run into the 20 handle above. What we were running into this morning in the pre-market time frame was the 30 handle below that previous low. Last week, Thursday's unfilled gap. And that is what has sent us into a squeeze here up into our resistance levels. Now, the question is, we move forward into the morning is could we make it all the way back up into our resistance? And the answer to that question is the VIX has already traded its extension. And if it lifts off from here, we're just in a massive front run of extension shorts. And so as long as the VIX is holding above these 2022s, rounding down to 20 and then adding a tick, the 2015s, we've already traded our support. And this extension yesterday, you can see it here, lifted us off and created another new low on the indices. And if it's traded, it could do it again. So although it looks like there's room to squeeze up into resistance inside of these resistance levels, inside of these counter trends, the VIX is telling us that we've already traded variations of resistance that could already be on their way into their larger targets below. And so that's what we're paying attention to here as we're going into our morning. The VIX has already traded its support, which creates an environment here where we have potentially already traded. This stream continues at eMiniAddict.com. The link is in the description. Join me there for tools and resources for learning measured move trading. I wrote the book on the measured move. Check out the hundreds of others that have learned trading plan development, pattern recognition, money management, and trading discipline with me to become the best, most confident trader that you can be.